Hi trader, this is Chris from Elite Currency. This video is taking a look at a live practical example how you can approach trade management with discipline, patience, and a combination of that. So let's dive into the example right now. So last week I was looking at the pound USD, strong upside momentum, price retracing back to the 38.2 fib, plus of course also the 130 round level, which was resistance until price broke above it, in this case right here, then was hooking back to it, so I saw it as a potential support for upside. So I wanted to trade that, and I discussed this in the live webinars with Admiral Markets. You can subscribe, and of course at admiralmarkets.com. And basically was looking for a bounce. So when looking at the SWOT system, there are multiple ways to trade that bounce. I mean, I discussed also just potential setups that could be traded at the 38.2 fib, price reactions, for instance. But the SWOT makes it easier because you can just look at the arrows and the candles right there. You can see the candles. So there are a couple of signals, as you can see here. Not all of them are set up properly as per the rules, because of the fact that this bottom indicator is not aligned at some times, and also the short-term moving average is not always aligned. But let's see, this one right here was perfectly fine, as you can see, and I took an entry about 130.20. So that was fine, and I was looking for an upside continuation. But in the meantime, the system, the SWOT system also explains, but just general trade management theory that I use explains that basically there are a lot of candles already below the 21 EMA. Sure, you can see the uptrend is aligned. Look at the moving averages here. Definitely a growing space between them, and also a space even between the 21 EMA. So everything is pointed upwards, but there is a bit of a squeeze as price is staying below the 21 EMA. So as that is occurring, that squeeze can lead to a triangle. So price needs to break above the 21 EMA and break above this trend line for me to get a confirmation that my trade is going properly. So that's why I was saying in the live webinar, not after the fact, and you can check with Admiral Markets, the webinars I made, that I need to have a breakout quickly. The breakout here, right, needs to happen immediately. Otherwise, price is taking too long before it develops. And I said that if this candle is bearish, I would probably I would move it to break even. I said yes. So indeed bearish, and I moved it to break even, and the trade got stopped out. So what happened? Was I too impatient, or did I do the right move? So of course that is something that you always can say in retrospect easier than live, and I'll tell you my philosophy in just a second. But you can see that was in time, because price indeed made a triangle and continued to the downside. And this is something I said live, is that there is a danger of a triangle if it doesn't break out soon. Why? Because this is an A, B, C, D, E. And it made a triangle with lower highs and higher lows. There was momentum here, I said, and indeed, triangle got broken to the downside, and we got another momentum, an A, B, C correction. So this is something you want to be aware of. Just basically patterns that could occur. Once you enter a trade, it doesn't mean that our side is bound to win, and we mustn't get kind of scared of analyzing price and reanalyzing and trying to remove our bias, because often when we are rooting for one side, we tend to create a bias. We tend to basically get attached to the analysis we made, and we hope for the best. But this is not the right approach. Just because we had an entry which was valid doesn't mean that we cannot keep analyzing the charts and keep our minds and focus open for more information and use that information to our benefit. So that's what I did. I liked the trade here, but I knew that it needed to break quickly above resistance, otherwise it would get stuck in a sandwich here between basically resistance and support, then it would basically be not a good trade to stay in. And that's why I exited, and I would have entered again if there were to be a breakout, would have been a breakout to the upside, for instance, and I could have rejoined that trade. So as you can see, ABC correction, and then price still found support and slowly but surely moving up in this channel. So this is an example of the trade management 4-step process where I am patient at the start of the trade, then get more critical if I see signs that price is not developing as it should within a couple of candles. Often, I give the trade 10, 20 candles. It depends from case to case. There's just a period of time where you want to give the trade time to develop. But if there are signals, patterns that are appearing that do not kind of support your analysis, then you want to be more critical and use a tighter trade management policy. Once you have it at break even or smaller loss, then you can again become more patient. You can provide the trade with more space, and hopefully it goes our way and into profit. And once it goes into more plus territory and more green territory, that you have more pips in your pocket, then you can again start to think about locking in the profit. So that's always the best model in my opinion. Give the trade some time, excuse me, and then you want to tighten. Then once you have it at break even or a small loss or a small profit, give it some time again, and then once you have more profit in the air, you can lock in again and use a tighter style. This is, I think, the best balance, and we discussed this in the SWOT course, of course, as well. So if you're interested, it's 473 euros, and I think you will really enjoy the very crisp and clear system, of course, that is connected to this particular SWOT system. All right, thanks for joining, and wish you all great trading. Please, if you like this video, share, like, and subscribe. Thanks.